Hey traders, this is Ron Haydad Financial. Happy Sunday and a big happy Mother's Day to all the moms out there. Hope you guys had an amazing day. Before we kick off any further, as always, everything in this presentation is for educational purposes only. It is not advice to buy or sell. We'll start out with 1 year daily charts. We'll go back and forth into some weeklies as we go along. Right now I have the spiders on my screen using Thinkorswim. This is where we were a year ago and this is where we are today. If we zoom in here, we are just ripping higher off the low from 330 and then into April 331, the beginning here, the end of March, beginning of April is when we began to rally really hard. The trend here is up. It doesn't take a rocket scientist to figure that out. It's just really moving nicely. We began to plateau here, took a breath, and now it's just going into its next leg. If we go to a weekly chart here on the S&P, now the weekly candle is up, puncturing and closing outside of the upper Bollinger Band. But the bands also started to get tight. Then we had the dip, the false breakout or breakdown, and now the breakout to the upside. Usually when you get a full candle outside an upper Bollinger Band, you would see a little bit of consolidation. That could only be for a week. It doesn't say we have to. And if you come down here, look at the weekly RSI, you're not even above 70. You're basically at 69 point something. As you can see over here, we can remain above 70 for months at a time. Bottom line is, yes, I know the market has really rallied hard. This was a shakeout, and now you're starting to play catch up. If this is a normal orderly rise, only now are you starting to maybe get, if you just chop that off, you're starting to get a little frothy. But if the idea is they're going to chase returns, they've missed this, they're not long enough, the market can go higher a lot longer than people can remain solvent, as they say. Let's go to RSP, the equal weighted S&P. After setting a new all-time high on Wednesday, we just have some consolidation. Normal price action. This could still be construed as a cup and handle type formation, which I'm not a big fan of at highs, but it's there. There's nothing wrong with the RSP. There's no divergence. You go to the Dow, it's just biding its time. Right now, all the rage is tech. Anything tied to AI. If these guys get their day in the sun, it's like I mentioned before, holy moly. I'm not personally long the Dow as a stock, but right now the action's in tech. But I have an alert set up there because if this breaks out, I think it's a big deal. It'll really get people's attention that this is broadening and it's not just isolated to AI, to tech. And I was reading an article about it, and there was some analyst or somebody was whining about it, saying, oh, well, it's just concentrated. I don't know what you're looking at. Yeah, we have tech in some of the software stocks, Micron, etc., AMD, SanDisk, some of these others that are gone ballistic, the semis, which we've been talking about. But we are starting to see it go elsewhere, and the market's not pulling back yet. It's really strong movement right now. If we look at MDY, these are your mid caps. They broke out with a gap on Wednesday. That was a big deal, followed by big honking bearish engulfing. That is normally not what you want to see, because then you could say this was to suck people into new highs, and they followed up with a club and they just beat you lower. But I would say this, where's the volume? If that was going to be a true reversal candle that would scare the you-know-whats out of you and really make you take pause, I would expect to see volume, and it's not a number, it's just something bigger than the breakout. Like, okay, get that thing spiking, you'd say, ooh, careful guys. It was pathetic. If that's all the bears could muster for some selling pressure, it's not much at all. So the MDYs have joined the breakout party. This is also bullish for the market. I'm curious to see, I didn't look what the weekly. Yeah, see, the weekly you got, hit the upper Bollinger Band, come back down. You're just starting now to break out on a weekly. If this rotates into these guys, that's super bullish as well. All right, MDY, let's look at the Qs. I have my notes here. Now the Qs were up 2.33% on Friday. Pretty crazy stuff. A nice volume day as well, a little bit higher than the last couple up days. You're outside the upper Bollinger Band on a daily basis. Now, here's what I would say. There's no guarantees to anything. When we had this false breakdown here, which was a shakeout and then led to this, and I said to you back here in these videos in the middle of April, hey, we're just starting to close outside of these bands. But that's because we were coming through a narrow period, and then it was this almost like a pendulum swing here, and now you're here. This isn't necessarily supremely overbought. Then we began to trade inside. The bands get wider. Now it was doing more orderly, slowly rising. But now you're longer in the tooth. So Friday's move, I mean, it is into a weekend. You can tell that greed is really present because folks do not want to risk missing out on the next the next thing, you would say, okay, now we have an overbought cues for sure on the daily chart. The RSI is now north of 80. That is usually a big deal. It just means, unless you're a really high risk taking type of trader, it's not where you go pile into, because there should be some reversion to the mean. But here's the thing. If this keeps going a little further, or a lot further, then you come back and have a big down day, you're just back to where you were. This is the FOMO, the fear of missing out that people keep chasing. I mean, an immediate support level would be this gap here. That would be the target. But this is firmly bullish. I think people that are shorting right now are getting taken out on stretchers, especially if they're going after the SanDisk, the Microns, the AMDs, and stuff like that. All right, let's do SMH. This was up almost 5%, almost 5 on Friday. After an incredible move, you are now outside the Bollinger Bands even more than you were on Wednesday. Notice we close outside long in the tooth because now you've had the rally. You should not necessarily, from a percentage perspective, the market can do whatever it wants, but from an average perspective, it just goes sideways, gets back inside the bands. It is no longer overbought because you're back inside the bands, just like that. Then you have the catapult right back up, fear of missing out into a Friday. RSI is getting back up near nosebleed levels, but hey, would you really want to short these things? And you wake up and it's like, it's another 10% higher. It's another, just look at SOXL. This is not normal. You would think this is some sort of penny stock or something where it goes from 67 and a month later you put a 1 in front of it. Crazy times. These guys are crazy overbought. You do have a negative divergence in the RSI. So when you get lower highs, but the stock goes to higher highs, they call it negative. It's actually a bearish. I personally wouldn't want to trade on it, and that's how I was taught. Is it something to be aware of? Yes. It's also big whoop-de-doo. It's going higher. So how do you use it? It's a yellow flag. Just, keep your sense about you. If there's something that's still long here, you might want to keep trying to bring those trailing stops up, because remember when I warned you guys over here that this thing was getting extended because the RSI was practically at 90, you immediately got a 2-day correction. And what did it do? Came down and filled the gap. It went from extreme overbought. It was no longer overbought. You were back inside the bands. The RSI was back down to 70, and it just said, okay, I took my break after that quick sprint. And here we go again. Then you have another sprint, 1-day break, bigger sprint. But now the RSI, the strength is failing as the rally's going higher. It does not mean pending doom. It means it just can't go up every day, even though that seems to be what it's doing. Because if the semis actually get whacked by 5% in a day or 10% in a day, remember, SOXL's a triple. This will lose 3 times whatever the SMH loses. But again, still very bullish though. If we go back to the semis and I take you to a weekly chart real quick, 3-year weekly, just look at this. You're pounding 1, 2, 3, 4. Nearly the entire week is outside the Bollinger Band. Highly unusual. It is a bull market. I remember I told you AI months ago. I'm like, this is still, I'm a baseball fan. Inning 1, 2, okay, 3 at the most type of situation. That means these things, in theory, if they still remain the winners, would keep going. Now you have an ETF, so you would have it spread out over other stocks. But if you assume that, okay, the semis will keep going, it doesn't mean they go up every week. There's a pause, money rotates into different areas, then it comes back, and then it pushes again. But this thing is insane. Insanely bullish. Now, let's look at some individuals. I got asked about some stocks. Now, I am long NVIDIA. I do expect good things from NVIDIA in its earnings report. Now, I'm biased, so I have real money on it. This could be the worst trading idea in the world, so I'm not here to brag about it. It's just if I have a real money position on a stock that I specifically talk about, I just disclose it for disclosure purposes. I am bullish. I do expect big things. The fact that NVIDIA hasn't really gone anywhere from going back to July and August a year ago, it just broke out 2 weeks ago. Then it came right back down, tested. That's why this box stays in here and I haven't taken away. This was the old box. This was the shakeout, and then it immediately began to fly. Now you're getting a short-term double top. It's all fine. The earnings report's coming up in about 10 more days. It should be a whopper. And that was my comment to you guys a while ago when NVIDIA still wasn't roaring. Could you imagine if this thing joins the party? So we shall see. We shall see. But it is technically bullish. Earnings T minus about 10 days. Heads up. Google. Keep on chugging. This was when the news was they were having class action, all that stuff. They lost something, and then all of a sudden, no one seems to care because you pack another $100 per share, and now you're sitting up here. How about Apple joining the party? After this pennant formation, this downtrending line we had drawn in, the 200-day acting as support, it actually breached the 200-day on the low of the market, the last shakeout. And now it's starting to curl, and it's curling at a much stronger rate. You are getting the RSI now north of 70. It is getting a little overbought in the daily, but it just went to new highs here this past week. They're finding other stocks to push. Now you can say, well, that's because of news. There's always a because. It just is what it is. It's breaking out. If they didn't want to pay attention to Apple, they wouldn't. All right, how about AMD? Absolute stratosphere. It's doubled in the last month and a half. This is not normal, but it also went nowhere from October to April. I'm going to say again, hint, NVIDIA going nowhere for so long. And now you say, is that what AMD just did? Wouldn't it be nice, again, I'm long NVIDIA, if NVIDIA goes through one of these periods? Will it, won't it? And my guess is it would bring everybody with it. Or does NVIDIA come out with earnings, pour cold water on it, and all these guys come back to earth in a heartbeat? It's all possible. That's why hedging is also important as you get into that earnings report. But right now, AMD, it's insane. They had a massive gap on earnings. They're up 10%, and they just tack on another 11.44% on Friday alone. And it wasn't on weak volume. I imagine people are trying to short and call the highs in these, and they're just getting taken out on stretchers, as they say. How about IGV? Keep an eye on this. Remember, this was also, here was IGV did not put in a lower low when the market bottomed. But then after the market began to rip, it then put in a new lower low. So it was interesting that its washout was about a full 9-10 days later, a week and a half later. And then I said to you guys, the first signs of life, and it doesn't just need to be for IGV, it could be for anything, is when it crosses above the 50-day, which is the orange line. It goes 50, 100, 200, and those would be your targets. We get above the 50, you instantly go previous peak, which wasn't that much higher, but the big target is going to be from here, you go to here. So we start getting up there, we roll back, look how the 50 now holds. What was once resistance now becomes support. So funny. Now you get above the 100, and now you're back testing it literally 2 days. You get above it, you hold it Friday, which was Thursday, Friday, you're back testing. Next target, gap fill up here from 128 at 97. And then basically the 200-day is going to be drifting lower. So it's about $7-8 higher would be the target now in IGV. So it's, the end of these guys apparently is not near yet. We'll see what AI does to them. Questions on other stocks. So I do own Tesla, just FYI. I've owned it for a while, a long time, you could say. One of the reasons I don't talk about it here is because I don't like to talk about stocks I own. So there's no, it's like always just talking about it because he owns it. You won't hear me talk about Tesla too often. I am getting a bunch of requests on it. So there was an analyst that put out negative news over here talking about how Tesla belonged, and I don't know if they downgraded or they just put a $200 target on. And I was telling our members at Financial that know that I own it as well. I'm like, to me, this guy's a complete blankety blank, doesn't know what he's talking about. It's not about the cars. It's about what's coming with, I can go through the list of things. It's just, personally, I don't care if he ever sells a car again to a retail consumer. It's all about the automated driving and everything else that's going to happen. So it then gets sold off while the market starts to rally, but then right around when IGV bottomed, this thing bottomed. Shoots up, can't get above the 100-day. I'm sorry, zoom in. It had trouble at the 200-day in yellow, comes back down, then it has earnings, and right away they run to, they're not selling enough cars. And you just want to say, do you really own Tesla because of the cars? And if you do, I think just, in my opinion, you're ill-informed, uninformed. Once you know what's really going on with the company of Tesla, you would say, and that's what happened to me a couple years ago when I was reading those reports thinking, oh my gosh, I sort of joke tongue in cheek, but I'm not. It doesn't matter if they sell a car to a retail customer anymore. It is what's coming. So the stock then drops on earnings and immediately halts. So much for the big money really caring about Tesla's earnings report. And all of a sudden you're back above the 50, back test, launch, pop. You just cleared technically the 200-day, which is the big mama. in white, in yellow, 200-day in yellow, and now the 100-day in white. You cleared both. Now, nothing's guaranteed, but when you see these types of breaks, you go to the previous high. Where's the previous high on this chart? You would say, well, I guess over here. But it didn't really spend any time there. So what the real target, there's a little bit of a gap fill at 474, but it's really back to 498. That would be the target. Now, I would love if it gets there because I own it. But at the same time, technically, that is your target. What happened, Thursday was a breakout. Friday was, okay, if you had any doubts of a breakout, you got it Friday. Again, long into the weekend, not wanting to risk missing out, FOMO. Had a question on Carvana again. Must be a bunch of you guys watching it. So Carvana is now inside a window where if you look at about 13 to 16 weeks, extraordinarily great track record, massive movements. However, there's about one more week or so of sideways action, and then it hits the motherlode prime time window from a historical basis. So you are printing a cup and handle here to here. You really want to see it stay above the 200-day, which it pretty much did, all but a few pennies over here. There was a back test. There was a back test here on April 30th and again on May 4th. This is all good price action. Yes, they've been red a bunch of days here over the past 2 weeks, but you're staying above support in this historically choppy window for the next week or two. I had a question on VRT. Hey, get over here. I know we did these two before, but another one came in. VRT is within its seasonally bullish window. It is just marching higher. You can see how the 20-day EMA acted as support here and the 50-day here. Those would be areas I would consider to use for potential trailing stops. All right, GLD real quick. Gold, let's do /GC actually. /GC is the gold futures contract. We are still below the 50 and the 100. They have now come together. A break above there would be bullish. If you go /SI, now I am long silver. If you come in here to SI, it has closed above the 50-day. By the way, it's above its 200. If you go /GC, GC is above its 200, but below its 50 and 1. /SI, above its 2, above its 50, and on Friday, you got above the 100. It's small, but it is outperformance to the upside. It is my opinion, which is why I'm long it. If we can clear this level right around 81-ish, that's when you go somewhere between 90 and 95. These aren't really big stopping points. The real target is up here. Hopefully we can get there, but it is turning bullish here. And look at these lows, very orderly higher lows. You can draw a very easy trend line in there. GDXJ, the junior miners, still sort of have like a panic going on. We could say higher, here's the high, lower high, low, higher low. This is it's basically some compression. If GDXJ closes above the 100-day, that's a technical buy signal. The RSI has already gone above 50. You would then take out this one around 135, then you go into the gap fill, about another $10 higher. And here are the silver miners. They are now on top of all three major moving averages. The 200 here, way down there. You have the 50 and now the 1. You got above both. This is a bullish buy signal. Almost got tongue-tied. RSI about 50, all looks good. You still have lower highs. So if you want to get picky about it, you would say, okay, just get me above this little high here at 101, but it's really not a big swing high. There's not a lot of volume there where it sucked people in. So the targets would be up here and here if it wants to keep going. And then really quickly, we'll end with crude. Here is, your highs are up here, your lows are down here, you're in the middle. You can say, maybe it calms down. Maybe it doesn't. The news media is always doing the news media job. They report only what they feel like reporting on both sides. It's really hard to know what's going on. So you just look to the price and you say, hey, we're in the middle of this range. It's not tremendously bullish or bearish where it sits. This is from a trading perspective. Highs up here, lows down here. You're in the middle. However, this is still considered a massive bull flag. So if you take the start from over here on the breakout, this is your flagpole, and it's a gigantic bull flag. So you're in the middle of a range, but it's still a flag. So crude on a daily chart would still be considered bullish. All right, that's it. Wish you guys a fantastic week ahead. Moms, happy Mother's Day one more time. And if you have any stocks you want me to cover from a purely educational perspective, shoot me an email, care@financial.com, and I'll try to get that snuck into the next video I do. Take good care, guys, and thank you for watching. I hope this helps.